Hey, welcome back to the channel, everyone. I'm Doug, the retirement guy with the GraniteShares Weekly Dividend ETF review, all 16 of them. Now, I know it's been a struggling week, but we're going to give you the good, the bad, the ugly of all the GraniteShares funds. And because you've asked, I'm now going to put out my personal portfolio of the GraniteShares funds to share with you what I've bought, where I stand, and how well GraniteShares has done for me. Let's get into today's video. Notice to all viewers, past performance does not guarantee future results. This information provided in this video is for educational and informational purposes only. It's more for entertainment. If you need to consider financial or investment advice, always contact a financial advisor. Let's take a look at the growth of this week's funds, and quite frankly, guys, it's red. It's red across the board. Everything has lost pretty much from a 1% down to a 10% loss across the board. The market's been down. It's been a struggling week, so nothing out of nothing crazy to talk about here. Other than, take a look at this. This is what happens when you use 2 times leverage. I'm not going to disagree with their strategies, but when you use 2 times leverage, you're going to get twice the down drop and twice the up in good markets. And here we are. This is showing you the 2 times drop off in these funds. The only positive ones that we have is going to be the AMD fund, and that one still year to date is up 0.24%. But overall, not a great week. We get into funds distributions. 16 different funds, 15 down, 1 up. So even the distributions, unfortunately, were down for this week as well. So that hurts across. It's a double-edged sword. It hurts us on both sides. So we take a look at it right now. IOYY and MAAY. Both of those are brand new funds, came out about 2 weeks ago. They're both number 1 and number 2 in the largest amount of dividends paid out. Number 3 is going to be HLYY, the Robinhood Fund. But when we do look at them, even those 2 funds, all 3 funds are down. We look at distributions, COYY, the Coinbase one, still holding good with a 153.38 distribution. And the IOYY at 150, MAAY at 147, and HLYY at 141. So they still hold some good distributions for the year. And we used a lot of return of capital across the board this time to keep these dividends up and running. So I wouldn't say that this was a lot of tax purposes. I think this was just one that they had to reach into their assets under management and pay out. It's my own personal opinion. I've looked at a lot of different assets under management, kind of give you some facts with that one, but overall, that's what we're looking at here. So when we take a look at the ratio distributions, their ratio and distribution stayed really accurate. COYY stayed on top. If you don't understand what this is, I'll give you my rule of thumb, what I use personally, how I do things. This is how to take 16 different funds, break it down to maybe a handful to review. And what it is distributions is how much of your distribution is actually coming from the percentage of the price of the stock. So what your target, my thumb target is 1.5 to 1.6 percentage. That gives me a nice return from what I feel in my investment. So anything above that is definitely something you want to look at. Well, you look at it, out of 16 funds, 12 of them are all above that. Everything in the blue, and then our top 3 winners are all above that. That's the one thing that GraniteShares does well, is they have a very high ratio payout for their funds. So COYY has 2.88%, IOYY 2.75%, and MAAY at 2.70%. The popular ones out there, the Robinhood one at 2.62%, the Tesla at 2.55%, and the SMCI computers at 2.60%. So some very good percentage there, even with the weaker dividend. Now, when we take a look at the return on investment, again, this is something I use when I purchase funds. I do this across the board. How quickly can I get distributions to pay me and get my investment back? Return on investments, what it's called that. I try to stay everything within 1 year. My thumb notice is 1 year. That works for me. It may not work for everyone else. It may not be your magic number, but for me, it's 1 year return on investment. So when you look at GraniteShares across the board, they do a very good job of this. You can look at, again, 12 out of 14 all fit my criteria. So that means there's 12 funds that I have to do the research on if I'm going to reinvest or put money into any one of these funds, because there's 14 or 12 of them that fit my criteria. The top three, which will actually be top four, is going to be COYY, and that's at a half a year, 26 weeks, to get a full refund back of the average dividend. Now, I'll put a warning out immediately of this. Look at the current new dividend, look at last week's dividend, and look at the average. You can see on average is above by about 8 cents. That will change maybe a week here or there. You look at last week's average was about the same. So these average will come down as we go, but across the board, it's always, these are the things you want to do. If the average stays the same, your numbers are accurate. This is only a snapshot of the information that we were given today, not long term. So these things will change on a regular basis. So the second one, SMYY, is at 29.68, so a little over a half a year. And you look again, the last week and this week's dividends are dropping. That means that average dividend was going to come down, which means we're probably going to add a little bit to the weekly side of it. And then the two that tied each other at 31 weeks apiece, that's Tesla and Robinhood. And both of those, again, they're all falling in that same pattern across the board. So total return, this is the magic number. This is the one that you probably spend the most time on, because this is what's funny here. And I've had people contact me and ask me different questions about this. COYY has the highest distribution rate. So that would normally be the first one everyone wants to jump onto. But they also have the highest, or one of the highest, negative growth of a fund. So realistically, their total return is only 101.55. And that would basically be if everything stayed the same, and after 12 months, these are the numbers. But we know the market changes. We know it changes hourly, daily, minute by minute. So these numbers are only a snapshot of what we see today. The real number one is IOYY. Now, this is because it's so new. It gives that nice distribution of 150.06, but it's down only 2.08% because it's only been out for a couple weeks. So you're losing about 1% a week for 147.98. The one to look at, HLYY, the Robinhood at 141.23. Robinhood is a fund that has the underlying stock of the Hood stock is a very, very aggressive stock and has a lot of volatility. So you'll see this thing down only 16% year to date for a 125. That one's had some track history, so you can look at it and say, when you have long history, what happens to the funds? Okay, now let's talk about my personal portfolio. This is my portfolio of what I've bought from GraniteShares. I've invested in 6 of their funds. Don't know why I do this, but I do about $5,000 per fund when I first start up. The goal of this fund, I want to make sure everyone understands the goal. My personal goal of this one is to turn these things into cash cows. And what is a cash cow? Well, that's when all of my return on investment, what we talk about in the video, when all of my return on my investment comes back into my pocket, into my bank account, I owe nothing. I have nothing invested in any of these funds. I can then take and move off and go into invest in other things. Then at that point, I just sit back, collect the dividends, and enjoy life. So like I said, I put $5,000 into each one of the funds. You can see that what I bought it at, the current price, the number of shares, the dividends, the value, everything is right up front. So let me show you the good, the bad of what we've had. The fund value is down $8,434 or 28%. So that means the value of the fund, the ETF funds shares that I have dropped over 28%. The good news is I've collected over $9,087 in dividends for a 30.29% gain. Now, that gives me $653.31 or 2.18% total return. Now, I know that's not the greatest number, and I can't really give you the exact that we've been doing this for a month or 3 months because I've gone ahead and bought more share, or not more shares, but more funds and different funds. So it's really not a true year thing. That's why I just keep it with what the ultimate goal is. So I'm still positive right now. If I sold everything, I'd still be positive, up 2.18%. But here's what I'm really doing and how I do this. If you look at that last column, TSYY is at 20. I'm going to round it up to 21 weeks. I only have 21 more weeks, and then I will have, from dividends, all of my investment back. So TSYY will be my very first, right now it looks like it'll be my very first cash cow from GraniteShares that I will just be able to collect dividends, just keep them coming in. And you see currently they're paying $74 a week. Not bad. The second one will be that coin, COYY, and then NVIDIA, and then everything else is pretty much in that 33 to 34 weeks, and then AMD will be at 40 weeks. That's my newest one that we added. So the goal here is to get them to cash cows. So ultimately, my plan and what I struggle with this is can I wait 20 weeks, 21 weeks, and just hold out? Will that price hold? Will Tesla hold? And that's what I'm looking at. Will it hold? Will the dividend hold? And if the dividend holds, I'm going to be fine. And then we'll be able to really rebound and have some different cash flow. So I wanted to share this with you guys and give you the bad deal. It tells you I'm no genius. I'm nothing crazy. I have a strategy, and that's what I always tell people is make sure you have a plan, you have a strategy, and work your plan, work your strategy. I'm doing it here. So by about next, I want to say June, July, somewhere in there, we will have 6 cash cows. And I'll probably be investing into other areas as well. So it just gives you guys an idea what's sitting, how things look, and hopefully this answers your questions. If you have any comments, put them down below. I'm more than happy to answer them and look at everything for you.